Hello, everybody. Welcome to Webinar Wednesday. My name is Martin Lovers. I'm the Chief Trend Watcher of Supply Chain Media. You might also know me as the Editor-in-Chief of Supply Chain Movement, European Quarterly, and also bi-weekly newsletter and website. We will have a live webinar and we'll talk about reshoring to decentralize your manufacturing and distribution or not. So we have a live webinar and we have great experts here. You see them on camera. So let me introduce you to them and then we go to the discussion. So you see me on the upper left side, that's me. In the middle, René Buck, CEO of BCI Global. René, welcome. Next, Patrick Haaks, Managing Partner of BCI Global. Patrick, hi.
Hey, thanks so much for having me.
And two experts, supply chain practitioners from the field, talk about their issues. First, Matthew Tetro, VP Source Finished Goods of New Brands. Matthew, hi.
Good afternoon. Thanks for having me.
And last but not least, Egemen Tunturk, CEO of Quix. Hello, Egemen.
Hello, everybody. Good afternoon.
All right. So we have a 60-minute webinar. It will be recorded and it will be made available within 48 hours on YouTube. The presentation will also be made available as PDF, downloadable on the website of BCI Global and also Supply Chain Movement. So, you can follow the discussion. Everybody's on mute, but you can ask questions. You see the Q&A functionality on the right-hand side of your screen. You can start asking questions during the conversation. If you have questions about particular slides or anything like that, you can type in this question right away. We'll have a Q&A at the end of the hour after the panel discussion, but you have also availability to ask your questions, so make sure that you all ask your questions in the Q&A. But there also, after the whole hour, we have an extra 30 minutes, and all the five of us will be sitting down at these tables in the lounge, and we have separate tables for Europe and the US. So if you have more questions not being answered during the Q&A, feel free to join us after the whole hour, and we'll have 30 minutes after talk, and we'll have a discussion to further discuss the topics we have addressed about reshoring. All right, so enjoy. And now I would like to hand over the presentation to Patrick, and he will present the end results of our collaborative survey.
Hey, thank you so much, Martijn, for having us here today. And I think I'm very excited and very passionate to share and take everybody here through the survey results and also talk about the topic at hand and what companies can do or cannot do. So I do hope you can see my screen. So what I'd like to do is, the topic itself. So when Martijn and I spoke a few months ago, global reshoring a footprint strategy and whether or not companies should reshore or nearshore, the topic itself is not new, right? It's been on the table, off the table for the last, I would say, decade. But interesting is that, when Trump came to office a few years ago, we saw a spike in terms of appetite for companies to consider this in terms of, hey, if you have overnight a significant part of the import duties exposed to your business, hey, that hurts your, that hurts your profitability. So you saw companies, thinking about what should we do or should we not do. But if you look into, 2 years after COVID, this really is a hot topic. So I'm very glad to see so many people listening into this, because it's really a question that senior leadership is asking. And it's a very fundamental question, I think, that senior leadership is asking you in the supply chain domain about, is really the era of global complex supply chain over? Should we, go to a reverse globalization? So think about, make in region and deliver in region for the region, so to say. So I think this is also a right point in time to, dust off in terms of, hey, is this really fuzz? Is this really reality? And bear in mind that, you see some companies going really very big in the media in terms of announcements. So we saw, in Lithuania, Dorel Sports investing in terms of a new factory. We saw, Intel in Ohio investing 20 billion in a new semiconductor site. So you see those big announcements, but under the hood, there's also a lot of movement, and especially when it comes down to, especially in terms of relocating, or if you talk about brownfields or relocation, if people do have some manufacturing or sourcing capability ready in place. So what I want to do in the next 20 minutes is share very briefly, for those of you that are not familiar with BCI Global, only 1 minute and a half, who we are and what we do, just to give you some perspective, then really do the deep dive on the survey and the results, and then I hand it over to the panel discussion and the interview that Renee will do with Egeman and with Matt. So please allow me to do a quick, intro of BCI Global and what makes us tick. We are a specialized consulting and implementation firm, and we really specialize in helping companies to understand and to reshape their footprint. And with footprint, I mean, think about, the score model from a source, from a make, and from a deliver point of view, and how you plan that. So we really help companies to understand, what should be the right footprint going forward. We help clients even to understand, hey, what should be the right location, given all of different considerations, and even go to the site selection, but also help companies to understand, should we make or should we buy, and how to make the implementation happen. So very much on everything that deals with the footprint, and we do that on a global basis with boots on the ground, with offices, as you can see on the screen, on various places on the globe. Also, we're very proud to be nominated for 3 times in a row by Forbes magazine as one of the best management consulting firms. So this is really kind of give you a kind of a lay of the land, on our DNA and what we do for our clients. So clients that we work with, and then clients in different industries, whether that's small or big. You see clients in high tech and electronics. You see clients in the life sciences, clients in industrial products, as well as clients in automotive industry. Also happy to have Newell and Quick here on the later on in the session. But we also work for clients in the process industry, the food and beverage, fashion apparel, and the logistics. And it's quite diverse. And I think important for later on in the survey, it's also important to understand, like, hey, what drives those companies, and what does it mean from a supply chain archetype? Because every company is different. So it's not like a one single recipe, that every company should follow. I'm not going to do a full-blown promo here. So if people would like to talk further with us, then I'm definitely interested to entertain a follow-up conversation together with Renee, with people that do have an interest. So let me just, highlight the topic and the questions your leadership might ask you, or questions you might have on the table, or you might be even exposed today in reviewing the footprint, or even have done that in the recent past. Important here. So we spoke earlier on, for instance, on the geopolitical side or on the trade barriers. So there's a lot of dynamic beyond the supply chain vulnerabilities and disruptions we all see in the news in terms of labor quality and availability, or whether that's on the need for agility and flexibility, or if you think about the carbon footprint and the emission trading scheme, or the carbon adjustment certificates that are coming into play. So there's a lot of dynamics that basically, from a supply chain point of view, if you're a professional that say, hey, are we really having the right supply chain in place? But also senior leadership asking the questions about, but is that really, are we too linked to China from a geopolitical point of view? How do we deal with IP and the challenges that go with that? Should we not reconsider certain elements there? And a lot of questions that you see on the right-hand side of the slide here is, what are those answers going to be? And I think this is really, making sure that companies and professionals like yourself, have some homework on the plate to kind of, figure out what is for you, for your company, the best way to deal with that. And then, questions like relocate or automate, we're going to touch base in the survey, but also in terms of, is big beautiful, and how does economies and scale, tie into, customer proxy in terms of being more closer to your markets in the make or buy, sustainability, brownfield, greenfield, and how do you basically make a right trade-off from everything that you can talk about from a total landed cost point of view, versus, qualitative factors that are very important these days, as well as the risk factors. And, from our point of view, from a practice that we lead and help companies in advising in such a journey, we follow, let's say, call it the 5 DE policies. And those are more like guidelines for companies to consider. And the first one is, decoupling, China and China-US, China-European links. So really kind of understand, like, hey, what does that mean if you would, go for the region by region approach? Is de-risking supply chains, which is, I think, is a quite obvious one, given the fact that we're 2 years into COVID. De-single sourcing, although that's easier said than done. If you talk about the commodity shortages, and if you're small and you talk to a big vendor, but if you spread down your volumes, that might not be the right strategy even going forward. But you need to think about what that means. decentralization of production distribution, the main topic for today, as well as decarbonization. So those are just kind of elements that, guidelines, policies for companies to take into consideration when you think about, should our supply chain be global or should it be more regional? And that basically cascades down into 5 potential, I would call it, footprint strategies that companies can think of. And if you go from A to E, a lot of companies have been going through, putting more inventory in the chain, but then you need to have the inventory. That's, I think, the challenge that we have seen over the last 12 months. But, as part of the disruption, how can you make sure you mitigate risk and have more inventory? It's also about, can we find different suppliers in different regions, to duplicate suppliers or to be more closer to our supplier base? It's about decentralization of distribution. So think about moving, from one facility in a particular geography to perhaps multiple facilities. It's the model where you can think about doing kitting, light assembly, or value-added logistics in the facility, in the distribution center, so more downstream, as well as decentralization of production. So those are just kind of, 5 potential strategies that you, as a professional, can consider when you think about global footprint strategies. And let's talk about the survey in more detail about, what we see, what the findings are, and what you can learn from that. And just to kind of take one step back here is that, Martijn from Supply Chain Media and BCI started this conversation, 3-4 months ago, basically for 2 reasons. One is, a lot of the existing surveys and material that is out there on reshoring, nearshoring, is very much written from a US-centric point of view. And what we wanted to do is really making sure that we have a global or international perspective. So we're trying to blend in both the US aspect as well as the European aspect. The other element that we want to make sure in the survey is that we want to not only look into today's situation, because, there's so much going on, but, what is the aspiration, what is the views of especially senior leadership in the next 3 to 4 years out. So we really wanted to make pictures of, what do we have today and how is that going to evolve going forward. I think that's going to be interesting for the audience here to understand that. So I'm very happy that, we have been able to kind of get 125 respondents in the survey from, senior level executives to also kind of provide that strategic view and outlook for companies with a nice mix of the different geos across different industry verticals. And of course, if you are in the food and beverage, your challenge will be different than in high-tech industry, which is by nature much more global, and other companies have already much more decentral footprint. But what I want to do is really kind of give you the lay of the land on, what are the key common observations and challenges that we see with the companies that participated. Before we go into a lot of the results, when we talk about those companies and think about, sourcing geographies, which is a key element of the survey, it's really a mixed bag on how companies source today. Yeah? So quite some companies have been, following the low-cost China route for the last 2 decades. But you see, it's really a blend between China, Southeast Asia, Western Europe, the US. So really kind of quite a dispersed kind of sourcing and manufacturing side. I think important here for, when we talk about, a footprint strategy, it all has to tie, and align with the business strategy, right? That's a typical consultant's remarks. I'm going to make that only once. But I think important here is, if you look at the participants, we have folks that are very much to the lean, into the low-cost model, the operational excellence model. We have folks that are very much linked into product leadership, so where product is king. And when you think about innovation and when you think about NPI, so new product introductions, really kind of bring products at a fast pace to the market, as well as, customer intimate strategy, where it's all about, responsiveness and really kind of building a solution for the client and in terms of the needs and wants of the client. So quite a diverse, portfolio where they're gravitating towards, a more customer intimacy as the dominant strategy. And on the picture on the right, and I think this is important because if you look at the supply chain domain, over the last few decades, it's very, very much in terms of, how do we make sure that, you manage cost, right? So we've always been very much cost focused, and you clearly see that on the right-hand side on the light blue bar, where, the predominantly kind of factor for supply chain strategy has been efficiency, lowest cost, make to stock or deliver from stock, really kind of prevailing as part of the strategy going forward. And I'm very happy to see that, when you think about, the various business strategy the companies have put in place, that the respondents are really looking for, how do we create agility? How do we create flexibility? And even shifting away from, a classical make-to-stock environment to, an assemble-to-order kind of, environment. And if you even would hone in more detail about, companies that follow an operational excellence strategy, you even see there that, de-risking and putting agility and flexibility in there even is following the same kind of route as what you see on the right-hand side. So it's really across the various business strategies that companies are saying, hey, agility and flexibility, that's the key driver. And it means that we need to kind of, build the capability in organization to accommodate that. And it also means that, from an insurance policy, that also might mean that, the cost focus, we should step away from that and focus on other elements. And we can definitely talk about in the panel or in the interview with Egerman and with Matt on that topic. The supply chain is not only about the footprint, right? You need to manage that, and you need to manage it in a proper way. And, we ask people to say, hey, how have you organized your supply chain? And what you see here in the light blue bar, which is basically the current situation 2021, and the dark blue bar on, hey, what do we expect going forward, is really on the current situation is a mixed bag between, companies that have organized on a country by country basis, that have a regional planning focus and a supply chain governance model, as well as a global, supply chain governance model. But what you clearly see here is a dispersed message that companies are stepping away from a country by country planning to go into a global planning and a global governance model, as well as planning for the extended enterprise with ecosystem partners. And I think, this is logical, right? So if you see the vulnerabilities and disruptions out there, it's very hard to manage it on a local basis. So you need to do that more on a global side, but also it means that you need to invest in having the right data at your fingertips. You need to think about the roles and responsibilities. You need to think about the right KPIs and the dashboards. Really, how you can, as an organization, how do you deal with those kind of vulnerabilities, the swiftness of decision making, and to deal with the dynamics going forward. I'm very happy also to see that the planning for the extended enterprise with ecosystem partners is popping out, because if you think about how many bullwhips we are currently facing, it's not only just one. I think we're at bullwhip number 5. We can only do that if we can, work together with our suppliers and the suppliers of our suppliers, as well as, capturing the demand pulse in the market to really kind of integrate in the best way forward our supply chain in order to realize the agility and flexibility required. If we look at from a downstream point of view, so think about distribution footprint. Again, what you see here is a mixed bag from various distribution models. And I'm going to use in my presentation a few times, a segmented approach. And what you clearly can see from this survey is that, the era of, having companies in the US with a single distribution center in one market for the US, or having, in Europe, a single centralized distribution center in the Benelux to serve all of Europe, that era is really fading out. You really see that on the left side of this chart. And companies are looking into, I think, 2 elements there. One is, moving away from that model towards more a decentralized or centralized with various hubs. So where, either you can cater for a particular market or a particular market channel or a product range to really de-risk and be more closer to your market. And on the other hand, you also see, the drop ship potential for perhaps distributors or FOB business, really where, perhaps it might be low complexity, but can you unlock the value of shipping directly from your sources? So it's really kind of that balance. And it means that companies need to be able to basically manage such a segmented approach going forward. The other question we ask, and I think this this doesn't surprise the majority of you, in terms of what are the top 3 challenges that people have out there today. So it's really the shortage of pretty much everything, right? Shortage of, commodities, raw materials, components. Everybody saw the elements on the semiconductors, but it's even corrugated board, it's glass, it is plastics. It's pretty much everything, although we see that softening out in the next 6 months. The transportation capacity and reliability, especially on the air and the ocean side. So really making sure that you have the right products coming in from your from Asia Pacific to the various markets in a reliable manner, and also in an affordable manner from a pricing point of view. and labor and talent shortage. Those are the real kind of challenges that pop out. I think interesting is that, when it comes down to, if you would have done this survey a few years ago, IP, currency, and financial risk would be much more prevailing, or customs or import duties. So that's really, I think it's nice to see that really the focus of a lot of people is really on the top 3 challenges that are out there. And when we look into some of the nuances between North America and Europe, I think it's interesting, and we can talk about that later on, is, the shortage of materials and components, that's really paramount. But if you dig a little bit deeper under the hood, you really see that, the transportation and logistics capacity and the shortage and the reliability issues, are really faced in North America much more severe than in Europe. So it's the light blue part of the pie chart, really about the dwell time. Think about the vessels congestion and docking in Long Beach or in different ports in the US, but also when it comes to drayage, when it comes to empty containers, really, really kind of having, instead of 30 days, having a supply chain inbound from 60 days or even longer, and dealing with that the unreliability, really causing a lot of issues. The other element that you see here is that in the nuance between US and Europe is the battle for talent and the dealing with labor shortages, which are depicted here in red, is much bigger. So it seems that, from a US point of view, the reliability and on the transportation and logistics side, as well as the labor, is really, more dominant. Whereas in Europe, the inflation, the fear of inflation and price erosion, can you cope with that, is popping out more. We also ask companies, what are you expecting to invest in? Again, we spoke about the footprint, but what can you do beyond the footprint? And, I'm very happy to see that, as my personal favorite, I would call it, is end-to-end visibility at item level across the entire supply chain. It's great that it comes out, but, we as BCI do a lot of work in this space, and we did a survey last year, and there, everybody basically wanted to have this. Like if you go like a kid into the candy store, everybody wants to have the candy. But if you look at the adoption level, it was even less than 65%. So there's a huge gap in terms of, bridging that gap. And I think this also requires companies and leadership, but also supply chain professionals to think about this differently in terms of, hey, are we making a business case out of this? Or is this really basically meaning, like, if we have complex global supply chains and disruptions will stay for some time, then we also need to have the right controls and mechanisms to manage that. So think about driving a car. If you have driving a car, you need to be able to have a driver license. So it's a different way of mentality. We already spoke about central planning and supply chain governance, really about how do you make sure you have the right data? How do you make sure you have the roles and responsibility, the capability in the organization, and the collaboration with suppliers and channel partners? So really what I was referring to earlier, not only on the supply sides, on the supply planning and making sure that you can collaborate your suppliers, but also on the demand side, really capturing the demand pulse. Let's talk about, the conversation about, decentralization of production, and, is really onshoring, reshoring. When I was talking about my introduction about the fuss and the elements there, is that really something that we're going to see in the next few years? An interesting thing, I think the overall conclusion here is that 60%, which is a substantial number, so 60, is really considering to onshore or to reshore in the next 3 years. So it's a big number, especially if you take into account on that quite some folks haven't figured it out yet. But also in terms of that, approximately 25% is really saying, no, we're not going to do that. But 60% is really considering this. And then if you look into the nuance between Europe and US, you can really see that the nearshoring movement seems to be more prevailing in Europe, whereas the onshore movements are really, sourcing and manufacturing in America for the Americas seems to be a little bit more prevailing. Now, we also ask, like, if you talk about the 60%, how, is this a one size fits all? Is that, is that basically much for all of the volumes? And already referred to earlier, like the segmented approach is key here, because what you can clearly see is that we're not expecting that everybody is, relocating, moving out of China or moving out of Vietnam. It's really about a part of the business that companies are expecting to basically bring to the region and sell into the region. So the minority of the volume, or whether that's linked to high-end parts, whether that links to IP or certain technology, or certain characteristics of the products, those products will be potentially relocated. So it's really important to kind of really think about also from your own practice in terms of as a practitioner, how do you segment the needs of the business, and what does that mean from potential reshoring and onshoring perspective. So then the question is, okay, if 60% of the companies are considering a certain volume to be reshored, onshore, where will this end up in terms of a geolocation? And what you see here on the on this particular picture is various locations, and you can see in the dark green the very likely, and then the light green the likely locations, and of course the opposite on the pick and the run side is really that Czech Republic, Germany, Poland, those locations are really popping out as favorites, I would say, in Europe. So not so much in terms of whether that's low cost locations in Central and Eastern Europe, or even Romania, Serbia, Macedonia. And what you see from a US point of view is really that the US and Mexico are really leading that pack for onshoring, reshoring, and that locations in Central America, Latin America. So think about quite some companies you looked into Costa Rica, for instance, a few years ago. That's not really driving this whole exercise. If you do this, of course, it's not so much about landed costs. So a lot of people looked at this from the past, like, hey, let's do a total landed cost analysis and then we're done. Important here is that when you do such a review and you think about, hey, let's reshore, nearshore, cost is only one part of the equation, but you really need to kind of think about what we call addressing the risk, and especially the risks that are usually see going forward, whether that's geopolitical, whether that's the IP risk, or whether that's or a currency risk, or what have you, as well as the qualitative factors. So think about the challenges that we talked about earlier, like labor, but also ecosystem, the infrastructure, et cetera, et cetera. So really need to make sure that you do a proper review if you're going to really consider and implement this. Well, if this was easy, then we would see much more traction, right? So, and I think the reason for that is twofold. One is, it is happening, but you don't see it that much in terms of the news, but you see it really on companies that already have certain manufacturing in some regions, that they're opening new lines, they're reallocating volumes to those regions. But the key barriers for doing this is really, I would say, the operating costs and the lack of scale. So think about if you are a low volume, high mix company. If you have an OEM, or if you have a contract manufacturer or a supplier in China, if you spread that volume by region, how does that impact your operating efficiency and your yield? So that's going to be a key driver there, right? On top of that, the lack of supplier base in region or near region. So can you then find the capability of the supplier base to accommodate that? Yeah, you can say, hey, we're going to move from China or Vietnam to Europe or Mexico, for instance. But then if all of your suppliers are still coming out of the Far East, how are we then de-risking our supply chain, and are we then making the right conversations and the right decisions? If we look into some nuances on the business strategy, what we see here is that from a customer intimacy point of view, it's really about lack of scale and cost and the capability supplier, where that for the other dominant strategies, it seems to be much more the capacity. So the ability to leverage more volume and the capacity of a supplier. Let's talk about, I think the good message I have for those of you that are running 3PL operations or are 3PL or are a contract manufacturer, is that outsourcing will continue to rise. So if you are a supplier of those services, congratulations. I think your business is looking promising. But outsourcing is really on the rise. And if you tie that into my starting point about the need for companies to think about agility and flexibility, you of course want to make sure that you can do that and leverage suppliers that can accommodate that also for you. So you really see that across the business strategies that outsourcing, both in manufacturing and in distribution, is continuing to rise. Then if you look into, and I think this is an important one, if you talk about the technology adoption, right? So think about on the left-hand side, manufacturing and the share of manual labor and the manufacturing technology, how that will evolve. I think this is really striking. If you look at the bars, we're expecting a huge shift from technology adoption. So moving from predominantly manual to semi-automated or even highly automated going forward. So in the future, really kind of whether that's robotics, whether that's fully automated production lines, that is really going to be driving the story. And when you think about this, if we're short on labor and we have a lot of labor availability challenge, and the labor with the inflation is also cascading, this is also an area where companies do need to invest in order to mitigate that. If you look into that right-hand side about how does that tie into distribution, so think about a pick, pack, and ship. I think the picture is even more skewed. So 75% of the respondents typically have manual operations, and that's really gonna flip the coin in terms of semi-automated. So semi-automated meaning pick to light, conveyors, sortation equipment, or even highly automated when you think about ASRS, shuttle systems, goods demand systems, etc. So you really see a skew on that particular front. So there's something interesting to see how that cascades from a technology point of view. So let me wrap up, also looking at the clock here. So I started the conversation with, hey, a lot of senior leaders are asking professionals to look into, hey, do we need to do a reassessment of, is the era of complex global supply chains over or not? And there's homework to be done, in my view. So because you see that some companies are really doing the study at the moment, some companies have already done that, some companies are implementing. And important here is, if you think about the need for agility and flexibility, what does that mean in order to make that happen in terms of the capability in your company? Is that, shifting away from a make to stock to a sell to order environment? So what are you going to do if that is really the ask of senior leadership to embrace and to do that? I mentioned a few times that this is not like a one-size-fits-all solution. So segmentation is key. So think about product lines, think about supply lines, think about what the business needs and how you basically means that you can segment that out going forward. Clearly, the 6.0 number about the nearshoring, onshoring is substantial, but when you tie that into the part of the business, it's a slightly different conversation. So you see some of the observations I called earlier, locations that are kicking in, and also the barriers for companies to make this happen. So we'll look to also like to get Matt and Egeman's view later on that. We spoke about the shift in technology adoptions. I think if you're a vendor in that space, that's also good news. But it also means that companies need to invest and put quite some capex in there. But on the other hand, if you're not going to do that and you can't find the people, then the question is, can you meet up your revenue targets and capture your revenue streams? So it's not only about the decentralization of manufacturing, it's also about the decentralization of the downstream model. And if you talk about that footprint, you also need to be able to manage that. So it also means that a mindset change from cost focus to a capability, including better investments in organization, in end-to-end planning, as well as visibility, and how to deal with channel partners and ecosystems. So with that, I would like to thank everybody for listening into the survey results, and I would like to pass the ball to Renee in interviewing both Matt and Egeman.
Thank you very much, Patrick. That was a lot of information, but as Martijn already mentioned at the beginning of the session, as of tomorrow morning, you can download the presentations on the websites of BCI Global or Supply Chain Media, and then also the recording will be made available later on. So it gives you the opportunity to digest the results. But digestion of the results can also be done by having listening in to two specialists who on a day-to-day basis have to deal with supply chain challenges. And I will first start with Matt Tetro. Matt is a VP sourced finished goods and CSR at Newell Brands. He's an experienced supply chain and procurement executive based in Connecticut. So Matt, welcome to the show.
Thank you, Renee. Good morning. Good afternoon. Good morning.
Yeah. It's still morning at you, right? So
sure.
Newell Brands is an American worldwide manufacturer and a marketer and distributor of consumer and commercial products with 8 business operating units in various, including a variety of brands. So we are talking about Rubbermaid storage containers, Bubba water bottles, Graco baby products, Coleman outdoor products, Sunbeam Parker pens, Yankee candles. It's a huge variety you have there in your portfolio. And Newell Brands is a big company, $11 billion revenues, running 135 manufacturing and distribution facilities all over the globe. So big company, huge. And why did we invite and were we so pleased that Matt was willing to participate in this session? because Newell Brands is a company who buys a lot in Asia. And then the question is obviously, with all the business disruption we had the last couple of years, with tariffs from China and with COVID-19 and with skyrocketing ocean freight rates. Tell us a little bit about the roller coaster, Matt, you were in the last couple of years, and how that is influencing, let's say, the events in the last 2 years. What kind of changes do you expect in your future strategy? So first looking back, then looking forward.
Sure. Thanks, Renee. That's a great question. And I think that as we just listened to Patrick for a while, I think that one of the big pieces, and I took from Patrick's presentation, is really on agility, right? And so I think that one of the things that this has tested, since about 2016 or 2017 with the 301 tariffs that went into place, and then also not just 301, but also the restrictions on European and Canadian steel and other areas that were attacked through the previous administration. And then obviously compounded with country shutdowns with COVID and restrictions and, things that have happened there, and then exacerbated with the unprecedented demand that our businesses and a lot of other businesses have seen that have come out of this. It's definitely been a roller coaster for sure. And it's been a challenge. I think that the biggest piece that we talk about and that we want to focus on from a Newell perspective is really just on that agility. As you mentioned, we do about 55, if you split our revenue from a make and buy perspective, it's about 55% make and about 45 source. And that really varies by business unit. We have some business units that source very little, less than single digits, 5% type stuff, and then make 95%. And then we have other business units that source 100%. So obviously, one of the things that we want to have is enough of a top level strategy around, hey, how do we evaluate risk and how do we build agility and flexibility into the supply chains that can not only service Newell, but also service the business units, and most importantly, maintain and improve service to our customers. Because that's really when, you think about what's been disrupted, it's all aspects of it. It's service to our internal stakeholders, it's service to our external customers and partners. And it eventually just comes back to in terms of agility and service. So the impact that we're having on our future strategy is one that we're not necessarily standing up in concrete. I would consider them to be more kind of 3-season or temporary structures that provide stability and provide flexibility, and really looking to achieve a better balance in our business.
But that means obviously that you have to reshore or onshore part of your production capacity, because proving agility on a day-to-day basis is difficult out of China, correct?
Correct. And I think that, when we kind of felt that we had worked through the tariffs and, there was a nearshoring exercise of moving product or moving suppliers capacity from China to places like Vietnam and India and other places inside of Asia with the COVID piece and the focus on trying to get to a dual source area, within our key product families and not have a geographical dependency. And then lastly, when, 12 months ago, when the ocean capacity started to become tight, it was like, did we make a mistake? Did we, should we have done things? So it's more of the evolution of, I think it's, again, there's going to be balance. I don't think there's any exit. I think that there's 40 years of industrialization that's happened in China, where a lot of the world will now depend on China forever for capabilities and things like electronics or electromechanical assembly, motors, pumps, complex types assemblies. So I think it's finding that right focus and balance for us to look across our products. Obviously making a pen is going to require different capabilities than making a blender, than making a Marmot jacket or a Yankee candle. So making sure that where we're moving them have localized source of supply, first and foremost at the tier 2 and tier 3 level, but then also have the capability and the population to be able to support labor in those places.
But let's dig a little bit deeper into those two elements, the supplier ecosystem and having the right people. Now, you mentioned before that based on the trade tariffs put by President Trump just a week after he took office, that made you move to Vietnam or Malaysia, to Southeast Asia. Now, talking about the supplier ecosystem, what is your experience there? Because you and I have both been many times in China, and there is no way that you can find anywhere in the world comparable broad and deep supplier ecosystems like in China. So
Correct.
what were your experiences when you moved as a response to the tariffs going to Southeast Asia? Did you find the right supplier base there? Was the way to have dual sourcing, or at least have not all your production eggs in one Chinese basket? What were your experiences in Southeast Asia, apart from the ocean freight rates? That's story number two.
We saw, we with most of our product portfolio, Vietnam was not prepared. Vietnam was a big landing site. I think they double or tripled their export value to the United States as a result, but still it was less than 20% of China's total export value. So they grew immensely, but not significantly enough to have, in my opinion, a material impact on the overall area. I think that my experience has been positive. I think that, for example, China through its Belt and Road Initiative has developed an incredible amount of deep water ports, not just in China, but also all over Asia, and now working its way through the Middle East, Africa, and parts of Europe and Latin America and Central and South America as well. So I think that there's when you get to a place, I think there's an assumption that it's just going to be fast. It's an instant, they're ready to go. And I think that, I think what I say from lessons learned in that, and now what we're doing in terms of evolving that to a more nearshore strategy, right, closer to where our customers are, is that more time is required and capital is required and resources are required to qualify the supplier. I think that, we've got a 25, 30-year history of moving products inside of China pretty regularly. And I think that because of the sophistication and maturity inside of the Chinese supply base, you can do a product transfer in 6 to 12 months. But when you move to a country go ahead.
No, go ahead. Finish your sentence. Sorry.
I was just going to finish up with, but when you move to a country with lower capabilities, you need to plan for the timeline to be exaggerated or increased due to the complexity and requirements that take place to get a production qualified.
But suppose now there is a certain product you would like to reshore back to North America. If we rate the supplier system, the supplier base for a certain type of product in China on a 10, on a scale from 1 to 10, how would you rate in general, based on your experience, then the availability of that same supplier base you need in Mexico or in the US? Is it then 8 out of 10 or only 4 out of 10? Just to get a feel for how big this hurdle is in discussing decentralization of production.
I think that there's a lot of options outside of China that will have equal to or greater than capabilities, right? But again, it's just the availability of it. So from a capacity perspective, there's a region in China called Shunda, which is in Guangdong, and they make, I feel, almost all of the world's small tabletop appliances. If you go to Mexico, you may have 2 or 3 options to be able to do that. And so the capacity to be able to take and migrate through a source finished goods type model is going to be challenging because they just don't have the capacity in other places. So technical skills, I think, you've got, the other piece is that there's 4 billion out of the 8 billion people in the world that live in Asia. And so obviously there's a much higher piece. North America, I think total population is somewhere around 500 million. Europe is about 700 million. So that, when you start to think about labor availability and the rest of that stuff, without a significant investment in automation and robotics, as well as design and NPD capabilities, testing, certification agencies, and so on and so forth, it's gonna take time to stand up that profile. I mean, we took 40 years to get China to where it is now. It's not going to happen overnight.
And you made a great example of what Patrick was making, the difference between capability and capacity.
Yep.
Final question for this first introduction is on the labor market. In the US, we see a lot of discussion about employment levels. Are back on pre-COVID-19 levels. So on December 2019 or so, we talk about the great resignation, the big quit, where all these people we need. How much of a barrier is the lack of people you need in potential to in potential new production facilities in North America, how big of a hurdle, a barrier is that you say, well, we do want it from a de-risking perspective, but we are just not able to do it?
Yeah, I think that, we may, there's an example of 20 years ago, as part of a brand that we used to own was heavy into sporting goods. And we had a facility that was in Minnesota, and it was outsourced in the late 90s to China to make the product. And then it was reshored probably about 15 years after it left. And when it left, it was 1,000 jobs. When it came back, it was 200. And so I think that that's the type of approach and balance that we're still using in these evaluations, is to make sure that when we talk about it, that we're not using data that may not be accurate to say, hey, listen, when we last made this, it was 1,000 people. So, making sure that we have a great balance and understanding to make sure our infrastructure is able to support, one, the automation, and two, obviously tie that with our carbon neutrality goals and make sure that we have the right number of panels on the roof to support the load. And then people-wise, there's a better balance of, it's not necessarily assembly folks. There is a high dependency on that, but there's also a, new profile in terms of automation engineers and support engineers.
Yeah.
So it's a great challenge for sure. I think that one of the things that we've done to combat some of the great resignation is that we've got a number of projects internally across all of our 8 operating units, that focus on conversion from temp resources to, we have very seasonal businesses like a lot of folks, to converting them to full-time resources, giving them full benefits and giving them, better jobs, increasing the pay. I think that the wage increases that we've seen go through, and a lot of people have seen it when Amazon and other folks come to town, all of a sudden Amazon's paying 20% more than you were. So we're trying to be not a fast follower in some of these areas, but be a leader in the geographies where we have both manufacturing and distribution, to make sure that we're not combating or trying to play catch up. We're trying to lead.
Okay, thank you, Matt. Let's switch gears to Europe and bring Egemen Tumturk to the discussion. Egemen is a COO of Cubic. Egemen himself is now based in Amsterdam, but worked before in Turkey and has a strong China experience. You did a little bit, more or less the whole East Coast in China, if I look where you have lived and worked, Egemen. And before joining Cubic, he worked 6 years for Bugaboo. And Cubic is a fast-growing e-bike company. That's, I would say, a fantastically growing business worldwide, but certainly in Europe. And providing with the e-bikes, providing really answers to urban challenges like congestion and pollution. And Q-Bike works with retailers in the Netherlands and Belgium and Germany and Austria, but has also its own consumer channel. So welcome, Egemen, here as well. And one of the reasons why were so pleased that you were willing to participate here is that you already moved in an early stage, I believe something like 2016,
Right.
the majority of your production to Europe from China. So my question is, if you knew that COVID-19 would happen, why have you not warned us?
Perfect. Thanks a lot, Rene, and thanks for inviting me to this session. I think that's a really good start. We definitely want to warn you for sure, all the professionals in supply chain. For us, I think it was a bit anti-dumping really created a crucial role. And then we were able to bring the final supply chain, the tier 1 supply chain, which is the manufacturing part, to Europe. But we still struggle about the tier 2 supply chain, which is our part suppliers to bring to Europe. We were late. So we were also a bit hit on that after the COVID.
And because you work now, you worked since 2016 with contract manufacturers, let's say in Bulgaria and in Portugal. How much of an advantage has given you that in that COVID-19 period? Because on the one hand, let's say using an e-bike got a surge anyway because people tried to avoid public transportation. And on the other hand, you could say, well, some of your competitors still have a very much Asia-focused production base, and they had all these problems with containers not coming over, COVID-19, etc. has it really given you an advantage in the market that you had a more Europe-based supply chain in comparison with other folks in the market?
I would say we benefited that greatly, Rene. First, of course, we moved the contract manufacturing here, and I think everything was okay till 2020. And the first time we hit with the COVID, we still Cubic still achieved a tremendous growth, like a 40% growth compared to the previous year. It was really a bit more in line with the growth in the industry, but it was really great achievement. But when it comes to 2021, we have seen that immediately that lead times start to increase, going up to almost 700 days, which is totally like unacceptable or not really usual or common in the bike industry. So it was really a bit for many bike companies, okay, what are we going to do? Because we used to have our planning with a horizon of maybe 1 or 2 years, and then how we are going to react to that. I think over there, the competitive advantage what we created is when we have the contract manufacturers located in Europe, our immediate action to or respond to that huge long lead time change was also thinking with the customer head, okay, how we can immediately shorten these lead times and we can continue to deliver to our customers. I mean, our customers, especially on the traditional, on the dealer channel, they are also business owners. So we have a bit dependency. So they are also dependent on us to deliver the bikes. And then we immediately trigger the action of inshore. So we start to bring certain part suppliers into Europe. And we started that at end of Q4 2020, where the activities start to kick in 2021. And the result was for us, again, a growth in 2021. But what I can tell you is maybe a significant number. If we hadn't had that operation, we would have lost 40% of our revenue in 2021.
So the fact that you had forced by the anti-dumping regulations, brought in an earlier phase already manufacturing to Europe, and that you were building that ecosystem also on second and perhaps even third year, that gave you a competitive advantage of 40%, 40%?
Yeah, I mean, we basically prevent the revenue loss, and we continue to deliver the bikes to our dealers in 2021 when the lead times were 700 days and longer. So that was really a significant competitive advantage. But what we also it strengthened the relationship and also trust between Cubic and our customer base.
But then the people would say, if you produce in Europe, make the math, Europe is far more expensive. So how did you manage with that Europe-based supply chain still to have a competitive pricing?
That one, I think what we bring also into Cubic is total cost of ownership model. And we build that model not only by looking at quantitative factors, like just the pricing or the transportation cost, warehousing cost. We also expanded in including the inventory turnover rates into the model, but we also look into the qualitative factors like the sustainability, country risk, supply base maturity within a region. And when we combine this all, we realize that, okay, we are moving towards a much more efficient supply chain when we bring into Europe. And that efficiency basically turned out to be a competitive also a kind of an advantage in the, let's say, the overall supply chain for us. And then at the end of the day, we still kept our healthy gross margin, even supplying and sourcing from Europe.
Okay, that's good to hear. I have another question for you, but just for the audience, please feel free still to use your Q&A box to pose additional questions. But Matt and Egeman are telling fascinating stories. Now, if you talk about total cost of ownership, you talk also about end-to-end costs, right? So now your main markets, your main consumer markets and your main production markets are in different parts in Europe. Now, how do you bring them together? So upstream, the manufacturing part, and downstream, the more distribution part. What kind of developments do you expect that will happen in the next years? Because producing in Portugal is great, but if you want to sell a bike in Belgium, that's a pretty long distance.
What is ahead of us? Thanks also for asking this question. And I think what is ahead of us is really an important challenge, but it's also very linked to the business strategy of the company. For QIC, first of all, what we define as our business strategy and focus will be around customers. So we definitely want to understand and build everything around our customers and consumers. So with that, we say that we are going to move towards a really agile and flexible supply chain. And we see that for us, this is a must, that we need to bring the upstream, the production side with the downstream supply chain, where we are going to manage the last mile delivery and optimize last mile delivery to our consumers and customers. So now let's say some of the options that are ahead of us is really that we are going to look into definitely the value stream when we, let's say, they bring our bikes to our end consumers and customers. What kind of optimization models we need to kick in. And when it comes to the upstream part, when it comes to manufacturing, we need to look into different kind of manufacturing strategies and also manufacturing locations. So at the end, the goal for us is to shorten this and have a complete connected end-to-end network so that we are going to continue to provide the best service and delivery towards our customers.
But do you mean by shorten also more geographical proximity?
Or
do you mean shorten more in delivery times?
No, shorten the geographical proximity.
Okay. Let's say I saw the very first question which came in the chat is a perfect question for Martijn. So let's open up the Q&A session. Martijn, one of the very first question was, Patrick told about agility and flexibility are more important than cost. I put it just a little bit black and white. Now, you could imagine that for companies focusing operational excellence, that's different than for companies on customer intimacy. So can you link that focus on the supply chain strategy with the three main business strategy models? Do we see that focus on agility and flexibility for independent on what business strategy, or do you see that in certain parts?
Yes, we saw differences in strategy and supply chain according to the three business strategies. So within customer intimacy, we saw more quick delivery compared to the other two strategies on one hand. Within product leadership, we saw that there's a need for less configuration and to have more volume flexibility. So that also is changing. And last but not least, within operational excellence, we saw that there is a need for a more rapid deployment, a more agile supply chain strategy. So we saw the different strategies also related to different responses to it.
Okay, great. And one of the elements Patrick was, as he admitted, such a fan of, is on end-to-end visibility. And that brings also my question to more IT and software. Visibility is becoming more and more important. From a software point of view, from an IT point of view, where do you see companies investing the most or struggling the most or seeing the biggest challenges? Is that on the production part? Is that on the supply chain risk management part? Where do you see the IT focus going into?
Patrick, to you or?
All right, I thought, Martijn,
Okay.
if you start, and I leave for Patrick only the easy questions. You can imagine that, it's my colleague. So,
yeah, right.
So give you the difficult one, Martijn.
So we did a survey in 2020, just after the first wave of COVID, and most of the company, 40%, wanted to invest in end-to-end supply chain visibility. But also when you look at the more leading companies, they are also investing a lot, up to 30% in supply chain risk management. So giving them early warning signals upstream beyond tier 1 and tier 2, and making sure that they have safeguarded the supply chain on one hand, and also in a similar amount, more investment in supply chain network design to have more grasp on their network and reroute their flows in case of disruptions. Patrick?
Patrick, perhaps you can elaborate on that. Matt and Egeman both talked about we need these ecosystems. We need to understand the supplier base, and not only the tier 1 suppliers, but the suppliers of the suppliers of the suppliers.
Yeah.
Now, an answer to that is, hey, should we not set up control towers? But how do you see that happening these days? Is that already implemented by 80-90% of the companies, or are we still in the early stages of companies having a control tower as answer to the visibility challenge?
I think we're still on the journey. So, Renee, on that front, so to chip in on what Martijn said, if you look into what you typically see, if companies want to invest in visibility, it's really, really on how do we get control of our inbound supply chain from the Far East to the US or from Far Eastern Europe on the long, let's say, trade routes where there's a lot of vulnerabilities, and there's a lot of software out there these days that is pretty scalable. So that's, I would say, a must do if you have complex supply chains. To manage your supplier in an ecosystem manner, that's a little bit more complex, right? Because you need to go into the bill of material. Do you have a contract manufacturer? Do you have a toller? What kind of arrangements do you have? How do you have visibility on the agreements? So, in a recent survey we did, what I was alluding to is like, hey, 60%, it doesn't have a control tower at all. And then only 10% of those companies we interviewed, only had upstream and downstream. So downstream is much more easier. But the upstream part on within tier 1 or within tier 2, that's really where a lot of complexity sits. And then, the question I think people need to ask themselves, is that something you want to solve with technology, or is that something you want to solve by geographical consolidation and building that ecosystem? So because if you are, if you have all of your supplier base, or 80% in Mexico or 80% in Poland, then the question is, how much technology do you need to put in there to manage that in a sophisticated manner? So you see companies that are very large. Think about technology companies. They really are ahead of the curve in that sense. But I would say the majority company is still getting, their feet wet in terms of exploring this. And one of the key barriers is that a lot of companies are looking into the business case. And, I think people need to look in the mirror to say, hey, if you don't have the controls to drive a car, then you need to have a different vehicle, or you need to go on a bicycle, perhaps the quick bicycle that Egeman sells, but how to make sure that you can do that. So I think this is a fundamental question people need to ask themselves.
Let me ask Matt and Egeman a question, and you have only to answer in one word, so which makes your life easy. How would you rate the visibility of your end-to-end visibility of your supply chain, including the suppliers? Is that, Matt, first of you, excellent, good, average, poor? You just have to choose one of those four. Excellent, good, average, poor.
Average.
Okay, so there's room to improvement. Egeman, how would you rate excellent, good, average, poor, your visibility of what your suppliers are bringing to you on the table?
Average.
Also average. Okay.
Hey, Renee, I want to add, just because it's such a diverse audience and we're a publicly traded company.
Yeah, certainly in your company, I agree.
But okay. I think that as a lot of people have struggled with this, I think that one of the great things that we have, and this is, we have a lot of great, very strategic partners, and as Patrick mentioned, one of the offerings that we see now from ocean freight carriers, trucking companies, 3PLs, other folks is this software that they're offering as part of their services. And so we leverage, as you said, a lot of the downstream stuff that's being there, and which I think we do a good job at. Where I think we can improve is on that second tier visibility. So, I'll give you an example. We have a product where we have 6 qualified sources, and literally at a SKU level, we could take and we could spread it across, to at any given point, and they could be making stuff tomorrow. There's a chemical that goes into that product that is only made by one guy in the world. So even though we think from an ordering perspective, you can do this, there's still constraints, right? And so, it depends on how far you go down. So in the same vein, that's where I see technology helping immensely, but there's just going to be areas that you don't have a solve for.
Okay, fair enough. Egeman, final question to you. Somebody says here, you talked about total cost of ownership, but how do you bring dimensions like sustainability and flexibility into that equation. So you can calculate and use your Excel sheet till Christmas. But how do you bring these more strategic considerations into that more financial-driven equation?
Yeah, I think that's I believe that so far in the many organizations that I work for, that's always a challenge. But I think it started with really how sustainability is defined as part of the company's in the company strategy. How is it part of its vision, and it is integrated into, let's say, its mission or not. I think that it starts from there, and then we also see that based on the strong commitment coming from the top side of the organization, then some of the decisions on the, let's say, towards the downstream, then we can make those decisions easy. I think it's really start with the strategy, but then when it comes to the financials, like how we can monitor, let's say, bring sustainability into total cost of ownership, our model just looking into where, let's say, our supply base, is it coming from a sustainable country or region or not? So because we know that sustainability is, at the end of the day, I want to say that it's not like one company or one person can change it. It's a collective effort. Therefore, we really rely on those regions or areas where we see that collective effort has been maximized.
And you could even say that.
Sorry.
No, and you could even say that your product is a sustainability accelerating product anyway, right?
By itself, exactly. So we are already part of it, but we still want to make sure that all our partners in the, let's say, the upstream supply chain, we also want to make sure that they also understand that, and then they also invest on that in that way.
Right.
So, but that's going to be our impact also.
All right. Well, thank you very much, Matt and Egemen. It was really a pleasure to have you with your good and detailed answers. So I give the floor back, Martijn, to you to close the session.
All right. So thank you for joining this excellent webinar, interactive webinar. So we have done a Q&A and some questions for the audience. So that's great. But still, we have some availability left. The next, look at it, 23 minutes. So right after this, we're going to join you in the lounge. So we'll be sitting down in table 1 and table 2. So you have more questions, and if you want to talk to us directly, we'll be available in the next 22 minutes. So please join us in the lounge. There's more to read and to download. On the left-hand side, you see a self-assessment about supply chain visibility in different shapes and forms on different levels. And on the right-hand side, you see the website of BCI Global with a lot of interesting content. And we will make sure that this presentation will be made available on both websites. Next, I would like to thank you, Matt and Egemen, for this excellent insight in your supply chain. Thank you, Matt, and thank you, Egemen.
Thanks a lot for giving the opportunity, Martijn.
Yeah, thank you very much. Good day.
Thanks a lot for joining us. And last but not least, I would like to thank you, Renee and Patrick, for collaborating on this global survey. So thank you, Renee and Patrick, for this.
Thank you.
And last but not least, for the audience for sticking on to this interactive webinar. Thank you for joining. And I hope to see you back another Wednesday, maybe next Wednesday. Or if not, I hope to see you in the lounge right after this. So thank you for now, and bye-bye. See you later, and hope to see you in the lounge or at another webinar. Thank you.